Good day, ladies and gentlemen. Welcome to the 89th session of FNA CBDC Broadcast. We're happy you're joining us today. As usual, I'm Carlos Leon, and I'm your host in this series of CBDC Broadcasts. We will give the audience a few minutes to log in and join. Welcome again. Well, in the meantime, let's have some housekeeping. As most of you know, the CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDCs around the world today. You can use the Q&A widget below to ask questions, and speakers will aim to answer as many as they can during the 10 or 15 Q&A part at the end of the session. Please do not forget that Chatham House rules applies. So for today's agenda, we have the topic which we have called "What CBDC features will drive consumers and merchants adoption?" Our guest speakers are Raoul Herborg from G+D and John Velissarios from Accenture. Let's go to the next slide, please. Before we start, always we give a brief intro into what FNA does, what FNA is. FNA is a leader in advanced network analytics and simulation. FNA software is used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events, and to optimally configure financial systems and infrastructures. As you can see in the logos that we have at the right of the slide, FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Next, I would like to briefly talk to you a little bit about what FNA does around the CBDC ecosystem. FNA has a CBDC simulation solution that is at the forefront of innovation regarding this space. Our solution enables users to rapidly test, model, and simulate the economic and financial stability implications of introducing a CBDC or other forms of retail digital currency. And this is particularly important for us and for the topic that we're dealing with today, because what we are trying to do with this CBDC simulator solution is to give central banks and other stakeholders the ability to understand how design options, those design options that will be used by the end users when they use a CBDC, the ability to model them and to think what will be the outcomes of having different design options. And that's obviously a very important topic to treat in this seminar, in this broadcast, because what we want is to understand what will drive adoption from the end user perspective. And the main benefits of our FNA simulation solution is that we'll be able to test different design choices to understand CBDC adoption outcomes related to disintermediation, financial inclusion, payment behavior, to simulate shocks and stresses, and obviously, and this is perhaps the most important part for today, improve decision-making when we are designing or deciding how to design a CBDC for the user. So before we start, I'm going to introduce our guest speakers. First, we have John Velissarios. Thank you for being here, John. John is Accenture's global blockchain and multi-party systems lead, responsible for digital assets, custody, and central bank digital currencies. John is currently leading several blockchain engagements with top-tier global organizations and central banks. John's expertise spans cryptography and digital currencies, risk management, threat and vulnerability assessment, security protocols, and governance and solution architecture and implementation. John specializes in capital markets, payments, and financial services, but also has many years of experience in other industries. He has qualifications as Bachelor of Science and Master of Science in Computer Science, specializing in cryptography and information security. Thank you for being with us, John. About Dr. Raoul Herborg, he has a long history in creating digital solutions. After building and running his own companies, he joined G+D 2018 with a clear mission to empower central banks to provide a secure public digital currency, a CBDC. Since January 2022, Raoul is the managing director of the CBDC unit at G+D, which collaborates closely with central banks around the world on their journey towards a CBDC, and is already running a number of pilot projects for the G+D CBDC solution called Filia. For example, Ghana is one of them. John, Raoul, thank you for being with us today.
Thanks.
Thank you.
So before we start, I'm going to give like a brief summary of what we are trying of the topic that we're going to deal with today, which is what CBDC features will drive consumers and merchants adoption. So we all know that CBDC is a very particular product. It's a very new product, in fact. An extremely successful rollout with massive adoption could affect financial stability, as deposits could migrate to CBDCs, and central banks and commercial banks do not want. On the other hand, poor adoption could mean a reputational risk event for the central bank. So the reputation and the public resources of a central bank are on the line here. Therefore, unlike most central bank products, it looks like CBDC design should be user-oriented, with consumers and merchants as the main users and commercial banks as the distributors. This means that before CBDCs are rolled out, there has to be a design phase that studies under which design options the CBDC will be used, will be convenient, as well as safe, reliable, and efficient. In today's broadcast, we will discuss how some design options could shape the rollout and adoption of CBDCs. And eventually, we will reach an impending concern. Is there really a good reason for the public, I mean, for friends and family, let's call it like that, to use a CBDC balance inside the commercial bank mobile wallet that we already have, or not? So again, thank you, Raoul. Thank you, John, for being here. Is there anything I missed from the introduction of both of you, or can we start?
Let's start. Yeah.
Thank you very much. You did very well, Carlos.
Yeah.
Thank you. So the first one is like our introductory question. It's there's an elephant in the room, obviously. How to achieve a digital version of cash, an instant and secure payment option for everyone, everywhere. Let's start, Raoul.
Yeah, thank you very much, Carlos. And also big welcome from my side. Happy that you join our talk today. Well, I think it's pretty much already in your question. How can we achieve something that is provides the benefits like cash? And that's, from our perspective, really very important. And it's also what we are seeing from many central banks around the planet. The idea that a central bank digital currency really delivers on these features like cash. So it's a means of payment that is universally usable, a means of payment you can maybe use without any transaction fees, a means of payment you can use without having a contract with a commercial bank or so. So ultimately, really a version of cash for the digital age, a public means of payment you can utilize also in a web shop, you can send to a friend, and that works in this digital age. What has to be done regarding this? From our perspective, it's very important that the central bank very much focuses on core requirements like the security of a central bank digital currency, that is focuses on topics like what is the regulation around central bank digital currency, what are the rules, what performance requirements have to be met. And then if you really want to reach user adoption, leave it to the market, leave it to commercial players. So we really envision a central bank digital currency ultimately as a platform that can be used by the entire industry to build their innovation on top, to build their services, maybe new products. It would be a platform that would come without these typical network problems you have when introducing new payment instruments, and therefore it could, if it's left to the creativity of the market of the commercial players, then we envision there can be a lot of truly great features built on top that will really bring a lot of benefits to the people, and therefore would build this benefit.
Thank you, Raoul. What do you think, John?
Yeah, I mean, you raised a few good points in the introductory sort of statements, and I think there's a few things that I just want to echo. One is, and we see this over and over in many of our discussions with central banks. One is the fact that in order to have a successful sort of CBDC project pilot or implementation as you roll it out, what you want is something that is successful in its adoption, but not so successful that it displaces the current incumbents in the marketplace and cause instability and other things in the market to unfold. So it's sort of a band, somewhere in the middle, right? So you have to be successful, but not so successful. And most of the, I guess, implementations and rollouts are geared to be fully successful, not partially successful, if you know what I mean. So it's a fine balance between sort of being able to achieve that level of acceptance, but at the same time not cause the massive disruption in the marketplace and so on, which it could happen if in the event that there's a wide scale full adoption of it, which is an issue, could be an issue. So I think that's the first point I wanted to make. The second one is around user acceptance of any CBDC solution. And you're absolutely right. It has to be something that is acceptable by the user community. And how do you convince, or why is it relevant for consumers to use a CBDC in any market? And I think the question comes back to, I guess, what is the motivation behind implementing a CBDC in any one geography or in any one country? And I think every country that we've seen, the motivations are always very different. Some of them are, rapidly declining use of cash, and this is a digital alternative to cash for consumers. And rolling it out is key to enabling sort of an independent national payment rail for consumers to continue to use it in the event of an outage or resilience in the marketplace for commercial sort of applications and so on. I think that the challenge with as well is that in most Western sort of societies, everyone already has a plethora of choice around different payment instruments. At the end of the day, cards, payment, Apple Pay, Google Pay, all these different mobile and electronic means of payment, we have an abundant choice of them. But what happens when something goes wrong at the end of the day? What happens when there's an outage? What happens if there's an internet outage or electricity outage and so on? What do we do? And I think these are the kind of things that sort of are at the top of mind of many of the central bankers, especially as they have a social contract with the people in our country to make sure that they provide resilient and secure payment and money sort of into the economy. And I think this is also part of the story where we need to consider, why is a CBDC relevant? And I would sort of, I'm uncomfortable with the word of, it's another payment mechanism, because actually it's a different format of money. We look at it as a different format of money. So today there are obviously two formats. The electronic ones that are held by the commercial banks as reserves with the central bank in an electronic ledger, of course, and banknotes. And here what we're talking about is the ability to provide that same kind of sort of functionality, but in a digital format for consumers, especially when you're talking about retail CBDC. So I think these are the kind of things that make it very interesting, because we've never had really the opportunity to do this. We're inventing a new format of money. And this is it's a once in a lifetime kind of experience, I think, that we're all embarking on. And I think that has a lot of attributes that we have to really consider as to what are the benefits and from a user perspective, and what's really driving sort of the pull or even the desire to have it. Efficient means of payment, store of value, the trust that you have with central bank money as opposed to potentially commercial banks and so on. So all these things have to feature into it. But I think the biggest challenge, of course, is to explain it to consumers, right, at the end. What do you mean my deposits are not central bank money? Electronic money today is in the eyes of a consumer are seen as sort of having the same sort of attributes as digital central bank money, but explaining that is slightly different. And I think we have a huge education to undertake in order to get to a point where we've communicated that and have brought them on board as stakeholders in this as well.
Thank you both. Normally, I will, if you have the opportunity to wrap up a little bit your answer and to highlight some things, that's something I will do. And this is a great one that I can contribute to put everything like together a little bit. I agree that central banks are trying to find a sweet spot. And this sweet spot is between, it's trying to achieve acceptance without disruption. That's the main thing. And I agree with you, John. This is not a new payment instrument. It's new form of money. So we're doing something which has not changed. I mean, we're introducing some kind of money and the last time we introduced a new kind of money was decades ago. I mean, a long time ago. So this is a great opportunity, and the end user experience should be like fundamental for this. Challenge explaining to the public, and that's one of the things that we're going to talk a little bit later. And as Raoul said, well, on top of the CBDC, there could be many things coming. I mean, from the private sector, from even the end users, which are those which are going to shape the usage of the CBDC. I mean, there are many things coming for the CBDC, and the CBDC just can be like a great platform to build innovation, product solutions, and so on and so forth. So let's go to the second one. What do you think are the obstacles in making CBDCs accessible to all groups of society, and what is being taken into consideration during the design and pilot stages to make it inclusive? Let's start with John this time.
Yeah, I think I think there's also a challenge around sort of adoption, and I think if we take a look at some examples, there's the replacement of cash, right, in society, where we have a high degree of digital adoption, a high degree of electronic money and electronic payment systems, and so on. And it's, there are discussions around switching off, the printing of banknotes. Now, the challenge with that is for a segment of the population that continues to use it, you now have, marginalized them at the end of the day. So that level of adoption needs to make sure that it becomes fully inclusive, and people can continue to transact and operate, on a day-to-day basis. Otherwise, you've blocked out segments of society and so on. So I think it's a big issue regarding how do you make sure that adoption is universal. There's the boundary of adoption, like digital phones and payments, and people who don't have necessarily all the means or may have disabilities to use some of these technologies as well. So that becomes a challenge to consider as well with regards to adoption. And I think these are the things that when we talk about it, what do we mean by sort of the successful adoption? Is it 100% digital, or is it 50%, or is it a complement to the existing ones? And I think that's also part of the debate, right? So we also want to make sure that we're providing these things into the market, but the aspiration isn't to completely eliminate sort of the existing sort of mechanisms that are there, because society continues to use them and so on. So adoption, I think from that perspective, has to take that into consideration. These pilots have to also make sure that there's a stakeholder engagement and discussions with the stakeholder community to make sure that both consumer groups, financial institutions and intermediaries that would be involved in handling it are also part of the projects as well, because at the end of the day, you will need to make sure that they're on board, and you've featured that into it. User friendliness of these things as well, and also the ability to transact easily, I think, without sort of friction in those, I think is going to be a key part of the successful adoption of implementations.
Thank you, John. Raoul.
Yes, thanks. Maybe a few things to add when we really talk about making it accessible. So the possibilities that people can actually use it, one has probably to differentiate between more developed countries. So if we look into Europe, I think it's quite easy to make CBDC accessible. You will simply wake up in the morning and your already existing app by your commercial bank has been upgraded to utilize CBDC in Europe, digital euro. So they're making it accessible would be quite easy for most of the population. If we look into less developed countries, there are quite a few challenges, I would say. I mean, first of all, what John already has mentioned, it depends on the devices you have available. So not everybody can afford the latest smartphone. So it's about, can we utilize other form factors? Can we utilize feature phones? Can we utilize maybe cheap smart cards that can be used by people without phones? The topic is not everybody lives in an online world. So there's a large part of the population that as of today has no connectivity. And if we speak about connectivity, we always think about a few signs on our smartphones. But for many people on this planet, connectivity is about being able to afford a data contract. So that's something to take into account. Of course, in general, costs. I mean, if you look into Africa, there are lots of payment instruments that are accessible to large parts of the population, but some of them really come with ridiculous transaction fees. And maybe last not least, but also very important point is the topic of bank accounts. Whatever payment instruments we use, they either require a credit card or a bank account. So if you have neither credit card or a bank account, you simply cannot participate in most of the digital payment instruments. So I would say these are kind of the hard barriers that have to be taken into account. And of course, then are all these soft barriers like ease of use, that people understand it, that maybe even older people which are not so much inclined with the latest technology, these all have to be taken into account. One last part of your question was about regarding pilots. Maybe we can dive a little bit deeper into that later, but in general, of course, this has to be considered in pilots. So in pilots, I mean, these are really the challenging and interesting parts. How do we reach those people that are not reached as of today by digital payment instruments? Because there is really where a central bank digital currency could provide the real benefit as a new form of money, as we have already discussed.
Thank you, Raoul and John. Just to wrap up, I would like to highlight the terms of connectivity. I mean, connectivity it will be key for adoption. The costs that CBDCs is a jurisdiction-dependent or society-dependent design. I mean, the design of the CBDC will depend on a lot on what country are we talking about? I mean, and the different features of each one of these countries. And one thing that John mentioned, which is I think is very interesting, is that all pilots or that pilots should include all stakeholders as much as possible, because it's not just a central bank thing. And I think that this is one of these topics that are really shocking for central banks now. I work at a central bank for 16 years. So I know that central banks are not really used to talk to stakeholders and try to get into a conversation in which we agree on something, but central banks are used to impose things because of their, let's call it, market power, regulatory power. So I think this is something rather new for central banks to deal with. And this is very interesting because, as we already mentioned and Raoul just said it, we're designing new form of money. This is not a payment instrument. This is something way bigger than that. So thank you. The third one is directed to Raoul. At Singapore FinTech's Festival, G+D solution named Filia was one of the 3 winners of the Global CBDC Challenge. Can you tell us more about this challenge and how the solution was designed?
Yeah, well, actually, not how the solution was designed, because actually we didn't design a solution for the Singapore Mass Challenge. We have a portfolio of products that are at production grade. So but we were in the very happy situation that the 12 problem statements that have been stated by Monetary Authority of Singapore back in June 2021 are pretty much very closely aligned with our vision of a central bank digital currency. So as a contestant, you could apply whether you want to answer some of the problem statements. We said we are capable to deliver on all these 12 problem statements. And in many sessions, we have demonstrated our solution, and ultimately are very honored that we were chosen as one of the winners out of 300 companies. But really what G&D is building here is a product. So it's not like a custom solution we built for various cases, but one product that strongly reflects our vision of central bank digital currency. And I think we and Accenture have quite a similar vision developed very independently, how a central bank digital currency could look like. We did this by talking to many central banks in the last 5 years, GND is in this situation of working with around 130 central banks and really try to understand the design criteria. And based on that, we built our solution. And the Monetary Authority of Singapore was pretty much, I would point out maybe three main topics that were convincing to them. One was really this idea of having a means of payment that works anywhere, anytime, even without connectivity, even without power supply. That was a very, very important feature. A truly inclusive means of payments that can be used by everyone. And we truly deliver on this feature. And maybe last not least, but I don't want to get too deep in this again, because I already mentioned it at the introduction, this idea of not creating like a CBDC payment instrument as the central bank, but pretty much a foundation that can be utilized by all market participants to build their innovation on top. We really are strong believers that this interoperability is crucial, and this was the third topic that was pretty much convincing. On a very high level, our solution pretty much consists of three different layers, and we on purpose very much separate these three because we think it drastically reduces the complexity. At the core, we have a payment layer, and this payment layer ensures the integrity of the payment ecosystem, that you cannot do double spending, that you can be sure that the money you get has been issued by the central bank. Then we have a governance layer. This governance layer can ensure you fulfill regulatory requirements while still providing a very privacy-preserving overall CBDC solution. And last not least, our third layer about smart wallets, programmability that allows for all these innovations that are, for example, happening in Thailand as we speak, where there's currently a hackathon running where a number of fintechs are building innovative solutions on top of our Filia solution. So that was pretty much the features that seem to have convinced Monetary Authority of Singapore.
Thank you, Raoul. I will, as usual, highlight three things I would like to highlight now. As you mentioned, CBDC is not a central bank matter only, many things around it. But CBDC could be the foundation for innovation and for so many other things. And third, and this is a word that we always hear in this broadcast, not only the CBDC, but the financial market infrastructure broadcast, which is interoperability. If we are building things on silos, we'll have more trouble than we had before, for sure. Thank you, Raoul. The next one is for John. Accenture is a partner in the Digital Dollar Project, which is an initiative committed to scientific experimentation towards a digital dollar. Is scientific experimentation a way for a central bank to achieve a user-oriented design of CBDCs?
I think absolutely. I mean, I think there's definitely a benefit for building knowledge in-house and understanding all the implications. Now, this topic, I mean, I've been working on this topic now for many years, and I think one thing I've learned is that the more and more we sort of advance in it, the less and less we know about it. I think there's a lot of things that we're all learning every day. And it is a multifaceted topic. It covers technology, economics, policy, governance, geopolitics. It covers a number of different things associated with it. And of course, all of these things come together in this umbrella that we call a CBDC. Now, I think in terms to learn more about it, to design the right solutions, to build the right things, and to pave the way for the new sort of evolution, or we call it revolution of money, right? At the end of the day, it needs to be very well thought out and very deliberate, I think, in terms of the approach. And so as a result, you need to build in-house knowledge about this. This is not something you can just hire a consultant to tell you about it. You have to actually know what you're actually trying to achieve here. And I think this is also part of the experimentation. You need to experiment. You need to look at different solutions in the market. You need to understand what is it that you're trying to build. And some central banks have approached it from a policy perspective. Some of it have approached it from an economics perspective. Some have approached it from a technology perspective and various sort of starting points. But I think the important thing to point out is that there's a lot to learn, and regardless of how you do this. And I think the sort of key sort of message is, I think that we sort of see is that you really need to understand, why are you doing this in the first place? What's the objective? What is the key driver for this? Is it, what kind of policy objectives are you trying to achieve? What are you trying to, why is this an issue? Why are you trying to look at sort of CBDCs and so on? And at the end, understand sort of how that translates into maybe more the governance, how you plan to roll it out. Is a two-tier model that you're going to engage the commercial banks to help distribute this into the marketplace? I think it's one of the questions that have come up in the Q&A on the column. Or is it something that you want to have direct, which we don't see too much of, sort of direct interaction with consumers? So those kind of things will make a lot of difference, especially as you look at rolling it out. And as you sort of look at how do you make this interoperable, because a different format of this money that is going to be used with all their central banks and in the global financial marketplace, it needs to be interoperable. So how do you use sort of this new format of money in that sense? So a lot of that will require experimentation. A lot of it will require understanding, tools and sort of simulation, like the stuff obviously that you guys have been developing at FNA as well. And also the experimentation to understand it more, to help make the design decisions. And we've seen projects where they started off, with a very well-defined sort of view of what they're trying to achieve, and then over time learn in the process, and then say, okay, we're going to make a decision after we've learned all this whether to do it or not. And then we're going to get, extremely serious about it and then roll it out. And then we're going to make a selection, and then we're going to roll out sort of the right way forward. And I think that's very indicative of what we see, sort of experimentation to understand it more, learn in the process, and then finally sort of make a decision, and then go through a proper sort of procurement process or development process to actually implement it and roll it out. As for the digital dollar, I think the US is a complex space, of course, with all the Federal Reserve banks that are there. And, there's a huge stakeholder community, a number of commercial banks and a lot of stakeholders to engage in. And ultimately, it's the global reserve currency. So there has to be a lot of thought that goes into how this new format of currency will enable sort of global financial markets as well, because there's a much broader implication. So I think it prompted us. The reason why we did it is that the dialogue wasn't happening fast enough in the US. It was happening in a lot of European and Asian countries and African countries and around the world, but not in the US. And I think what we wanted to do is stimulate the dialogue by starting the digital dollar project as we did, and that's been very helpful for that.
Thank you, John. There's something that you mentioned that I liked a lot, which is central banks are working from different perspectives. I mean, there's like a different mix or blend of perspectives. You mentioned that there's a policy perspective, a technical perspective or technological perspective, an economic perspective. I've always wondered if the CBDC process, if we are thinking about scientific experimentation, shouldn't it be close to what Apple, Google, Amazon do with their products? I mean, central banks should be thinking of having like a product perspective of the CBDC. I mean, minding about end user perspective, because I mean, we all have discussed the motivations of CBDCs in several broadcasts, and those are very easy to mention: financial inclusion, efficiency, redundancy, so on and so forth. But where is the user there? Is perhaps there's like the missing link here is to have like the user perspective or the product perspective. Perhaps central banks are not used to this for when they design their policies, and that's what they're missing. And that's where when at least FNA is trying to fill the gap by having some simulation methods that will allow you to simulate and to test those design options, which are the end user options, and to try to understand what would be the outcomes of doing that. So I think that the product mindset is something that is missing in central banks, and we can all, with this scientific experimentation and the simulation methods, we can do something about it. So thank you for your answer, John. I agree completely with that opinion. The fifth one, central banks appear to be working on their CBDCs in a rather siloed manner. Should central banks be developing standards for CBDCs to achieve interoperability? Raoul, what do you think?
Yeah, well, I think that's pretty much a matter of time. I mean, for sure, there will be standards, and there are also activities going on. Like, for example, if you look at the Bank of International Settlement, kind of the central bank of the central banks, or at least a kind of service provider, there are a variety of activities going on. There are many kind of individual joint projects between central banks. I think, John, you can probably elaborate a bit more on those because you've been part of some of them, especially in the wholesale domain. So for sure, sooner or later, it will happen. But one thing is very clear. This will not lead to kind of a global currency. It will still be individual currencies. So a CBDC would still represent a digital dollar and a digital euro or a digital baht or whatever. And there will always be some sort of interchange service. It's not like a technical issue, but ultimately, because it will remain local currencies. So with that being said, I mean, it's gonna happen. It's pretty much just about the timing. But maybe, John, you can add because you have been
exactly
of those projects.
Yeah, no, exactly. And I think that's a very good, excellent point. I think what we see here is we have a tremendous amount of sort of projects and activities all over the place, and everyone sort of many central banks are sort of experimenting, piloting, implementing, and rolling out. And we don't want to end up in a situation where we end up with silos right at the end. This is sort of it would make it very complicated, but there are ways to address that. And I think what we see is sort of projects and engagements that bring many of the central banks together. The BIS, as you point out, on Project Enbridge as an example of that, it does exactly that, right? At the end, it's for central banks that are working, in unison to try to sort of look at how to deal with cross-border interoperability and payments and so on. And I think there will be many others going forward. And we see, I think, projects that kick off, that start in this area, typically are very much introspective, domestic oriented, focusing on themselves as they're sort of focusing on trying to solve the problem for their own economy first, and then slowly begin to look more broadly outside and saying, actually, the real value here is connecting with our neighbors in a regional story. So that level of connectivity is important as well, because then all of a sudden you've enabled something that's much bigger than just a domestic CBDC. You have something that has a regional value, a regional sort of focus, and then more broadly, more internationally as well. But ultimately, you also have sort of large central banks. The ECB is an example, that brings many of the Eurosystem central banks, national central banks together, doing it for the Eurosystem more broadly. So I think there will be some dominant players in the market that will influence the direction of where this goes. But you'll end up also with many others that have implemented it. But the idea here, of course, is that what we don't want to do is end up again in silos and find ways to deal with and manage interoperability. And there will be bridge integration services and a variety of other ones that will allow sort of the hopefully seamless transition or translation of one to the next. And I think that's going to be a key sort of opportunity for players in the market, but also an area that is going to be much needed as well in the development.
Thank you, John and Raoul. We're getting a little bit late, so I'm not going to do any more roundup of your answers. So I'll go to the next one. One clear advantage of physical cash is its ability to withstand technological failures, such as power and communication outages, and to be available in remote locations. How can CBDCs achieve offline payment capabilities in a practical and efficient manner? Raoul.
Yeah, well, first of all, it's probably the question, why are we 2022 still speaking about offline? We think it's very relevant, and that's not because GND has been around for 170 years. So we think offline payment is very, very relevant. Very briefly, we see three main drivers. One is, from our perspective, and that's also what we've heard from large central banks, if you want to make a CBDC legal tender, which seems to be the case in many jurisdictions, you want to make it as easy as possible for all market participants to utilize it, and putting the hurdles to introduce CBDC payments, for example, for merchants as small as possible. So, and being capable to work also offline would definitely be one thing adding to this. The next topic is what we already spoke quite a bit about, is financial inclusion. I think I already mentioned the points previously. If you really want to reach financial inclusion, offline is a very relevant feature. And maybe last not least, the topic resilience. I mean, we are now living in a world where we always have to be prepared for the unthinkable. Just look what has been happening in the Baltic Sea in the last days. So I think it's a lot about resilience and having a payment instrument that would still work even in a crisis situation, be it a natural disaster or like a political crisis. And for that reason, in such a situation as of today, cash is really the only payment system that can be used, and kind of bringing up a CBDC solution that would foster to this, that would solve these problems, would definitely be truly beneficial. How to do it? This is something that's difficult to answer in a few sentences. You're aware we are providing an offline solution. The biggest challenge for sure regarding offline is the topic of security, because you do not have a backend system available that you can utilize to validate the payment. That especially applies when you want to do consecutive offline payments. So I'm paying to John, John is paying to you, Carlos, and Carlos again to me without any connectivity. So a lot has to be done regarding security. Then, of course, you have to think about physical barriers, how to get things across to the people, because obviously when it's an offline solution, you cannot just provide it over the air. So there are quite a few challenges, but they can be solved, and we are working on this. I'm allowed to speak that we do a pilot in Ghana, or we just finalized it, and that's really a remote village, and a few market stalls utilize the e-CDs there, and people pay at these market stalls without any connectivity, even without power supply. We utilize smart cards for this that can provide this level of security, and it was very well received, and we got great feedback from the people that were utilizing it a lot, and we had to provide more and more because really a lot of people wanted to participate in this pilot. But for sure it's a crucial feature, and I think it's very relevant.
Thank you, Raoul. John.
Yeah, I mean, I completely agree, and it's a key fundamental requirement in all of the retail sort of propositions that we've seen in terms of CBDC projects. Offline is is one of the key reasons why you'd implement some of the functionality that you need to have in a retail CBDC in order to provide sort of the value and the benefit of a digital currency in that format. And as Raoul points out, you have a lot of things to consider: security, the multiple payments and cascading payments, and how long do you keep it offline for, and things like that. But in times of a national emergency, that this is meant to be as a fallback mechanism for a national payment rail and for society to continue. So offline is a key part of that. So assuming no electricity, no internet or network connectivity, how do you continue to operate? And I think that's a fundamental question. The question then is offline. Another question I would have is offline, but offline for how long, right? I think that's and that could create interesting challenges. So is it offline for a minute? Is it offline for an hour, a week, a day, a week, a month? And continuously offline. So those kind of scenarios, I think, make for an interesting sort of debate. And I think it's probably because it has a lot of security risk, policy decisions, and AML consequences as well. If we're using it in for maybe for nefarious transactions and things like that. So how do you manage all of that? But offline fundamentally is a key requirement. I see that, and a capability I think that is necessary in order to provide retail CBDC and a strong value story, part of the value story. Imagine this is a digital bearer instrument. At the end, you're using it to to settle payments in a digital format without the use of any physical banknotes. And so how do you enable this? Is it in a card format? Is it in a phone or app or whatever format? What's the format's important in terms of the end result, where you and store it, but also how you transact it and so on. And I think offline is one of the key design sort of requirements and criteria, I think, for a successful retail CBDC deployment. And as Raoul points out, there are many countries, even advanced countries, that don't have full coverage of internet because of remote locations and things like that. So if you're designing and building a solution that is supposed to be for a nation, how do you get 100% coverage? Because inability to pay even in a remote village or a remote location is not an option. So how do you do this? So offline is a key component that enables that.
Thank you, John and Raoul. We're running out of time. I have still 2 questions. I'm going to skip one of those, otherwise we won't have enough time for Q&As. So I'm going to do the last one, and it's related to the CBDC poll that I just launched. And it has to do with the following. Every time I talk to friends and family and explain them what a CBDC is, even if they're like financial or economic knowledge, I mean, if they know about economics and finance, there's something that I always wonder. Why would banked people, which is people that already have access to bank products, a mobile wallet, banking app, why would they need to hold and use a CBDC balance in their already existing mobile wallet? Do you foresee, I mean, you too, do you foresee people around you, I mean, friends and family, finding a good reason to hold and use a CBDC balance inside their commercial bank mobile wallet? Raoul.
Well, of course. Let's really answer from my perspective as a Bavarian. There are plenty of reasons to do it. I mean, first of all, and I would see there is a really biggest benefit for us in Germany is there is no universal means of payments that works digital as of today. I pay at a shop with my debit card. I pay in the internet with credit card. I utilize PayPal to send money somewhere else. Then there are all these commercial bank solutions that only work with the other 5 people I know that work for this, that have the same commercial banks. So, and a CBDC that would be legal tender would be just like cash. You could use it everywhere. It does not mean that I have to use it everywhere, but at least it would work everywhere. It would be a means of payment I can use without disclosing any personal data, most probably. I mean, look at all the North American payment service providers. There, your personal data is typically part of their business models. It would be a means of payment that I can use when I go hiking in the Bavarian mountains. I mean, I don't know who does hiking, but you usually have to carry quite a bit of money. Also, these mountain huts are cheap, but you cannot pay with the cards there, and because they have no connectivity. So I would see, even for our developed countries, plenty of reasons, but still, of course, in our more developed countries, it's more driven by an interest of the central bank about keeping monetary sovereignty, about keeping sovereignty, staying in control, and so on. Over to you, John.
Yeah, thank you. And I was trying to answer the poll actually as well, so but it says we can't answer it as a speaker. So, I think you absolutely covered it, Raoul. I think you all the points you raised are fantastic. But I just want to mention one thing. I think in all of this, I think it doesn't matter until it matters, and when it matters a lot. I think this is a key thing about this kind of solution. It's hard to actually say, that we're trying to displace the existing systems. That's not the point. The point is, this is meant to be something that is going to be trusted and used when it actually really matters for people. A situation of Raoul hiking in the Bavarian mountains. I mean, obviously, if you can't pay, then you can't get what you're looking for in the mountains and stuff like that. But in times of national emergency, in times where you have situations where the existing solutions don't work for whatever reason, then it matters a lot, actually. And I think this is where explaining it to people, I think is that narrative has to be part of that story, because I think we've all been caught out, in situations where we've not been able to sort of transact, and then all of a sudden we find ourselves completely paralyzed. We don't have the cash, no one takes it or whatever. We don't have the method of the payment doesn't work because it's offline or whatever, and then all of a sudden we're stuck. And it's one thing when you just can't buy something that you're looking for or whatever, but it's another thing when it actually is at a time where you actually need it. And I think this is where we need to think about that in society as well. And I think we need to feature that as part of the narrative story.
Thank you, John and Raoul. This is very, very, very interesting. I would like just to highlight something from what John said. I usually go to this Japanese retailer, and they have a very nice slogan, which is, "I didn't know I needed it." So perhaps when we get in touch with CBDC, we'll realize that we needed it. But right now, we are not aware of that. Let's go to the Q&As. I think this is the first broadcast in which we have more than 30 Q&A questions. So I will try to go through to those which I think are most important, perhaps. And this one has to do with the operation of the CBDC on pilots. So I think that both of you have some experience on this that can enlighten us. When a consumer goes to a merchant and uses CBDC to pay via a point of sales device, does the merchant get CBDC or a transfer to his deposit account at his bank, like with debit card?
My view is that they should get CBDC, and then whether they choose to deposit it back into their account, it should be a choice on their part, right? At the end of the day, because it's like you're receiving a banknote. Now you hold it as a merchant. You have an option to go to the bank and deposit it, right? I think the digital means of it means that you can compress that acceptance and deposit thing and make it instantaneous, but nothing forces you to do that. And I think you can actually retain it and pay suppliers with and pay your employees with immediately. You don't have to wait for that settlement process to take place. So I think it depends. It depends on how it's accepted, what happens once it's accepted by the merchant.
Raoul.
Agree.
Okay, that's fine. The next one. Going from old Mission Impossible films and James Bond films, no security system is fully secure. How this new digital form of money will be protected?
That's probably for me. G&D is a security company. Well, there is no short answer to that. I mean, security is a really complex beast. You have to tackle from all aspects. You have to look at organizational processes. You have to look into, of course, technology, algorithms, and you have to look into certifications. In Germany, CBDC would be called part of critical infrastructure, and you typically have certification processes. So you constantly need to upgrade the security. You have to prepare for quantum computing. So I think it requires a very thorough, very well thought approach towards security from a holistic perspective. And that is something we as a company, for example, are doing since a long time. We have one unit that a company called Seconet that really delivers on this defense grade security. But I don't want to get into advertising, but ultimately we are really probably at this level. We need to provide defense grade security, and we need to align the well-established processes, methods, approaches that are utilized in this very, very sensitive domain to ensure that a CBDC is secure and resilient.
Thank you, Raoul. Next question, regarding the distributed ledger technology versus centralized ledger technology. What is the balance right now in the CBDC's projects and pilots?
I think, I'll take this one. I think at the end of the day, I think I don't have a number in mind. I think because I think there's a lot of projects out there that are sort of exploring both of these solutions. But I think at the end of the day, it comes back to what are you trying to achieve and what are the design decisions that you need to make in order to achieve those things. And I think some of the solutions have been focused on sort of providing sort of a means of payment for consumers in some markets. And as a result, it built sort of solutions that have been much more centralized than others. And if the desire is to have sort of certain type of characteristics, such as the digital bearer instrument topic of is a tokenized digital bearer instrument topic, then all of a sudden that becomes a distributed sort of implementation as opposed to a centralized one. So the concept of centralized and distributed ones, it gets kind of fuzzy too, because architecturally you have things like validation, and you have other type of components in the architecture that perform certain functions, and you can argue that it becomes more centralized or not, depending on how those are implemented and rolled out. I think that's something of almost like a topic that needs further elaboration, a question and an answer that needs further elaboration, but it depends really on the technology choices that are used by the different vendor solutions that are implemented. And again, there's many different solutions that are all out there. And I think we will see more and more sort of experimentation and implementation, but I think that it's hard to come up with the exact number, the precise number. We focus mostly on things that are much more distributed in terms of the solution and approach, because it achieves certain types of characteristics that are more beneficial for the clients and for consumers and end users, and are more aligned to the objectives of what central banks are trying to achieve.
Thank you, John and Raoul. I'll have the last one. Would you agree that CBDCs provide more benefits for the business-to-business area than for the end consumer?
No. I think business-to-business works quite well. It could be utilized there, of course. Probably not if the ECB decides to stick to the 3,000 euro limit, because then it would be, the digital euro would be simply useless with a European focus for business. But ultimately, the idea of retail CBDC is really what I mentioned in my introduction, to be very much like cash, and but digital. And cash is not utilized a lot by business-to-business payments. Different beast would be the topic of interoperability. If we would really achieve a central bank digital currency that would allow programmability and could be this foundation and kind of this common standards that can be utilized for everyone, and kind of leaving this limitations like 3,000 euro on holdings, then it could be, but it's probably a next step.
About that balance cap that you mentioned, if that balance cap applies to merchants, then when the merchants receive a transaction in their point of sale device, then there should be like an automatic way of not surpassing that threshold and converting it outright to deposits, right? Otherwise, the merchants will become banks of CBDCs. I mean, like, not banks, sorry, like big depositories of CBDCs.
You're bringing up a very good point, and these things are discussed within the ECB. Exactly what happens with my 3,000 euro limit. So we probably need different wallets for merchants, whereas this 3,000 euro limit does not apply.
Thank you. Thank you both. There's a comment which was an answer to something that I said, that perhaps central banks have to do, or to start thinking more like Apple or Google. And someone mentioned, yeah, but Apple does not run monetary policy. I completely agree. The thing is that doesn't rule out that central banks should think about CBDC and money as a new product, and to try to develop something that is end user driven, not just central bank motivations driven. And that was the whole point of my comment. So we're going to finish today's CBDC broadcast. So thank you for being here, Raoul, John. It has been a very interesting, very I was going to say emotional, but it's not emotional. It's very vivid, very nice debated broadcast. So I thank you both for being here, and I foresee having you here once again in the near future. So thank you for being at the CBDC broadcast number 9. Please get in touch with us or with Accenture or G+D team in the links that we have in the last slide that you're going to receive. And please take in mind that coming in October, we'll have the CBDC broadcast number 10 with the Bank of International Settlements. On October 20th, we're going to have the FMI broadcast number 6 with Bank of England and SWIFT. And October 27th, we're going to have broadcast number 2 with Central Bank of Colombia and the regulatory authority of Qatar, sorry. And that one of Colombia is something that I would like you to invite you very specially, because I worked 16 years at the Central Bank of Colombia, and this subtext broadcast will have a lot of information about what we did at the Central Bank of Colombia several years ago. So once again, thank you for being here, and I hope we see you in the next broadcast, all of you. Thank you. Have a nice day.
Thank you very much. Bye.
Bye-bye.
Thanks for the moderation, Carlos.
Thank you, Carlos.
Thank you.
Bye.
Bye.